to really think about those next steps in probably most all of our trajectories here at the University of Florida or wherever we end up landing. But today I am so pleased to welcome. We have three speakers here today. We're going to start off with Shannon Edwards and Victoria Pepra Asante from Human Resources. And as you know, we have some new benefits rolling out, and they're going to talk to us specifically about those benefits and how they may shift during retirement. There'll be more opportunities, I think, for all of us to get involved in how we want to work on establishing, those funds and goals. And so it'll be really helpful to talk to Shannon and Victoria. And then I'm very delighted to be to have Peggy Carr here, professor of landscape architecture. She was the founding director of the Sustainability in the Built Environment program, made so many contributions also in the role of associate dean. And she's coming to us from a cabin in the woods. And I'm very happy to have her come. And after Victoria and Shannon share some of the changes and introduce us to what's happening in the HR retirement space, Peggy has been gracious enough to talk to us about what her experience was like, however she wants to define that in terms of maybe planning to make that move into retirement, how it's been, what surprises she encountered, what went very, very smoothly, and any other advice. And then I think we are going to have a good amount of time for some discussion and questions to wrap up our session today. So I am going to turn the program over to Shannon Edwards. Thank you for leading us down this road, Shannon.
Absolutely, and thank you so much for inviting us. This has been a busy few months for us as we have rolled out many initiatives. And so, of course, you probably have heard about changes to leave and PTO. And then, of course, we just wrapped up open enrollment last Friday. And now we have changes to our investment services. So this has not been a boring time for us here at UFHR, but I'm thrilled to be with you. I've been at the University of Florida. Actually, today makes 15 months. And so I am a short timer, so I can't wait to hear, Peggy, you tell your story of retiring from the University of Florida. But I am new here. And when I joined here, I was tasked with these pretty large initiatives that we wanted to roll out, but I couldn't do it alone. And so I have, as I affectionately like to say to her all the time, my right and my left hand, Victoria Pepra Asante, is on this call. And I assure you, she is the one that can make the magic happen behind the scenes as we roll out these programs. So we're going to tag team this. I'm going to share my slides. But given the size that we have here, please ask any questions. We want to, as the invitation said, demystify any questions you might have from a retirement perspective. So feel free to stop me, ask me any questions, but I'm going to go through just a quick summary of what we have. And then I want to make sure you understand where we're going because there are some changes that are coming, and I want to make sure that you're all aware of those. So I am hoping you can see my slide. Can you see it? Is that, yes? Okay, fantastic. Well, one of the things that we learned through hiring an outside consultant was that University of Florida has some really good benefits. And I will tell you, I've been in the private space my whole career. I've been in benefits for 25 years, but always on the private side. When I came to the University of Florida, I was pleasantly surprised at the healthcare options that we have, at some of the other ancillary products that we have. I do not like having 11 dental options. I just want to go on record as saying that. I think that's crazy, but the state offers more dental plans than we ever should. But there are some very rich, generous benefits. The two areas that we realized that we fall behind in would be retirement and also on leave. And so that's why we addressed these two initiatives. But as a reminder, and all of you are in one of these plans, but I think it's important, Victoria and I have done about 50 presentations in the last 2 months regarding these initiatives. And what we found out is people are still, can be, confused of which retirement plan they have. Now, I'm thinking those of you on this call are very well versed in what you have, but I just have a reminder slide up here. Through the state of Florida, as you all know, it's mandatory to participate in a retirement plan, which, by the way, for those of you who have not been in a, you know, or if you've come out of the private world, or you haven't always been in a state university system, that was new to me. This is the first place I've ever been that requires a mandatory participation, which is a good thing because we all need to contribute to our retirement, but it was an interesting dynamic. But we have the pension plan, of course, the investment plan, and then we have the SUSORP, the State University Optional Retirement Plan. Would anyone like to guess, as of right now, which is the most populated, most popular plan of the three? Any guesses? It is not the pension, if that was your guess. Most of our employees are going into the SUSORP plan. And the reason being is that employer contribution, that 5.14%, as we get new people in. Now, for those, many of you who have been here for a longer period of time than me, which is probably everyone, many of you might be in the pension plan, or you might have been in the investment plan at some point and bought your way into the pension plan. It all depends. It depends on where you are in life. It depends on how long you plan to stay in an institution, because the vesting periods, you have to be very careful, of course, with that. But these three plans, everybody walks into these plans with different reasons as to the why. Now, the SUSORP plan, if you are a participant in the SUSORP plan, you have multiple vendors that you can choose from, which I'll be honest with you, I think it makes things a little confusing at times. There is also a voluntary component to the SUSORP plan where you're putting in 3%, but you have the option through this state plan to put in an additional 5.14%. That's voluntary, but what I'm about to talk to you about, the change, has nothing to do with this. This is through the state of Florida. Nothing is changing, but I just wanted to remind you of how these plans are structured. Now, there's also a voluntary 457 deferred compensation plan. So let's say you're in the pension plan. You're doing a mandatory 3%, but you realize you want to tax defer more of your income into retirement vehicles to be able to have more at retirement. This is a vehicle in which you can do that. This is offered through the state of Florida through the Bureau of Deferred Compensation. We do not administer this plan. They do a great job of administering this plan. FRS, Florida Retirement System, they do a fine job. I'm very impressed with the Florida Bureau of Deferred Compensation. We just tend to have great service from them, but this is also voluntary. You pick an investment provider as well, so you have some choice as to who you want guiding you in this process. Now, something different about a deferred compensation plan is you're allowed to take a loan or a hardship withdrawal. So let's say times are tight, you need to access some of this money, you can in a deferred compensation plan. Through the state of Florida plans, they do not allow you to take loans or hardship withdrawals. Something that, to be frank with you, that is something new as well that I have never seen in my past, but that is how the state of Florida administers those plans. And some people get passionate about that. They want to be able to touch their money. Well, you really can't in the Florida retirement system. You cannot touch that money until, of course, you retire or if you terminate employment. Now, the IRS says we have these great vehicles. and they're great and wonderful and they're helpful, but there's only so much that you are allowed per IRS guidelines to put in these plans. And so I've put this up here for you just as you might not have ever seen it. This is on our website, on the benefit website, but there are calendar year limits, plan limits that you may put into these vehicles, if you will. So let's say you're over 55, shall we? You're over 55, so you look at this far right column. You would be allowed to put $26,000 into a voluntary 403B plan. And that's what I'm going to talk to you about in just a second, the changes that are coming with those plans. But you could put up to $26,000 if you're over the age of 55. Let's say you also wanted to defer more money and you wanted to do a deferred compensation plan that I just showed you. You could put $26,000 up to in a deferred compensation plan. You cannot go over $58,000 total in what you are able to tax defer into these vehicles. But every year, the IRS looks at these limits and decides if they want to make a change, if they want to allow you to put more money in these plans. The 19.5 and the 26,000, that's the same that was for calendar year 2020. So the IRS did not change that amount. But what we do on our team is if you want to max out on any of these plans, we make sure that you don't go over, because there, of course, would be a tax penalty. And so I have someone on our team that monitors the limits, and she loves that part of her job. And I am so grateful that there are people that love that part of their job, but she ensures that you all are within IRS guidelines. So let's talk about changes. And you might have heard about changes. If you are participating in a voluntary 403B plan right now, you should have received an email from us on September 9th, and then you should have received an email this past, I don't know about y'all, I don't know what today is. Is anyone struggling with what today is, except Peggy, who's in a cabin, who didn't have to have these 2 weird days off? But I really want today to be Monday, and it's not. It's definitely Friday, but I think on Monday, or Tuesday, it was Monday, we sent you an email regarding these changes to the 403B plan. There was a video, there was some extra information where you could find out these changes. But what is changing? So in January 2021, Fidelity Investments is going to be the sole record keeper for the University of Florida defined contribution plans. So what plans are those? Well, for you all, it would be the 403B voluntary plan if you participate in that, or going forward if you would like to participate in that because you're thinking about retirement and you want to put more money aside. Fidelity will now be the record keeper. Let me define record keeper for you. It's an intermediary. It's between you and your money coming out of your paycheck and how you want to invest it. A record keeper does not mean that that is Fidelity funds or it's just a Fidelity platform. It's that Fidelity is just the conduit between you and your investment options. Now, there could be some of you on this call, I don't know if there are, but at some point in time, maybe you had an OPS appointment, and it could have been from a long time ago. At that time, you would have had money going into a FICA alternative plan, or maybe you have employees that are OPS employees that would have money going into a FICA alternative plan. That is not a voluntary plan. That's a mandatory plan. And instead of Social Security coming out of an OPS employee's check, it goes, that does not occur. And this contribution goes into a FICA alternative plan. That has been managed by AIG VALIC for years and years. And now Fidelity will also manage that plan. And for those of you on this call that might be looking towards retirement one day and you might cash out some of your leave, if it's over $5,000, that goes into something called the special pay plan. And what that would do is any money over $5,000 goes into the special pay plan. And at that point in time, you can roll that money out and you can put it in your retirement vehicle. You could work with your retirement planner on that, or you could cash it out as well. And depending on your age, there might be taxes and a penalty. But if you're over age 59 and a half, there just might be taxes that come out of that special pay plan amount. So let's talk about why we're making the change, what's staying, what's changing. So if you look on the left-hand side in the blue column, that's what I just talked to you about. All of these items, these vehicles through the state of Florida, nothing is changing. So the pension plan, the investment plan, the 403B plan, that's not voluntary, that SUSORT plan. And even though I talked to you about there was that little voluntary piece you could do, if it's through the state of Florida, nothing's changing. The deferred compensation plan, that one that's through the Bureau of Deferred Comp, that is not changing. All of that is staying the same. What is changing is on the right-hand side, and that, of course, would be that FICA alternative, the special pay plan, and then if you have a voluntary 403B through the University of Florida. And if you do, you would have picked one of these vendors, TIA, VALIC, Voya, MetLife, and Fidelity. So we have received, what I have learned in my short 15 months at the University of Florida, which might make some of you laugh, is there are no lack of opinions here at the University of Florida, especially when it comes to benefits. And you might say, Shannon, you fool, it's with everything. And I understand that, but my world is benefits. But there are a lot of opinions, and we have heard from a lot of individuals with strong opinions. And I appreciate a good, strong opinion. And I can't always make you understand why or convince you that moving to Fidelity is the best thing for you. But I consider my job making sure you understand the why we moved to Fidelity. So some people have said, why would you do that? Why? TIA is the biggest record keeper out there in the higher education space. I'll tell you, I don't disagree. TIA absolutely has more higher education clients than Fidelity. There's no question about that. That's what they've built their business on, and that's where they're always going to have their business. But we went through a competitive process and invited all of our record keepers to participate, and invited some new record keepers as well. And at the end of that presentation, we narrowed it down to 3. And then at the end of the 3 finalist presentations, the committee all agreed that Fidelity was the best fit for our employees. They are a market leader. They are in the higher education space. They're actually gaining traction in the higher education space. Many higher education institutions have looked at their fiduciary responsibility and said, we've got to look at these voluntary plans. We have to make sure that even though University of Florida is not paying anything for these voluntary plans, but we are still offering them to our employees, we have to make sure that we are doing our due diligence to ensure that that is the best plan we can get for our employees. And that's the process we've gone through. Also, those schools listed here on this slide have also recently gone through. So like I said, we had a committee that has been in the works for over 2.5 years. So before I joined, but we really picked up steam since January and went through this process. We had faculty and staff on this committee, not just HR individuals, but those from finance. And then we had staff from the School of Business who have investment experience as well. So why are we making this change to this voluntary plan? Well, we want one record keeper. We do feel that's important. We do feel that our employees will get the best deal for their money by having one. What we saw when you have 5 record keepers, and I was shocked when I came here. I was shocked with the number of dental plans, and I was shocked with the number of record keepers. And historically, I think we just added record keepers for whatever reason. I'm sure there were great reasons to do that. But over the years, I'm not sure how much then we looked at what's the pricing, what kind of funds are being offered. I can tell you we have some of the same funds across all record keepers, and the fees are all different. By doing this, we can have one fee structure for the funds and also for the administration fees. And for employees who have said, well, I don't pay anything for voluntary 403B plans, but you do, but you might not see it easily in your statement. And so we are going to be able to ensure that you will see those administrative fees and also the fund fees as well. So we've learned a lot in the last few months, and we've taken popular questions and we tweak them every time we do this presentation with either what employees have asked us or what we might have learned. Victoria and I walked into this process feeling pretty okay about where our knowledge on making this change. And every day, I will say, we are humbled because we learn something new every day. And then we want to make sure that all of our employees understand that and help walk them through the process. So beginning with your, remember, if you're in the blue column, or if you're in the orange column, sorry, if you're in the voluntary plan, beginning with your December 31st paycheck. So December 31st, that contribution will go to Fidelity. So the 12/18 paycheck is the last one going to whatever record keeper you currently have. And then 12/31, it moves to Fidelity. There will be a new fund lineup. Each record keeper right now has a fund lineup. We're going to have one. However, hold tight on that one because I want to explain to you, if you don't like it, I have options for you. There's always options, and there are a lot of options when it comes to this change. So the biggest question, the most popular question, and I would say the most confusing question, will your assets, let's pick TIA. I have TIA. Will my assets at TIA move to Fidelity? And the answer is maybe. And the reason that is confusing is because of this. When you go into a voluntary 403B plan with any provider at any institution, that contract is between you and the record keeper. So what many of these record keepers have are individual contracts. And those individual contracts, if you have assets in an individual contract, they will not automatically move unless you initiate a transfer. TIA, of course, has built their business over the years by offering annuities. Those annuities are TIA specific. They are not transferable. They will stay with TIA. So for many people who've said, I don't want what I have at TIA to transfer to Fidelity, I will tell you that, unless you have done a contract with TIA with a liquid mutual fund, your assets would stay with TIA, but your new contributions would go through Fidelity. MetLife and Voya, every single one of those are individual contracts that our employees engaged with those vendors for. Those assets would not transfer. And AIG VALIC, many of you might know it as VALIC, but AIG's bought the business, so it's kind of AIG VALIC. That will not transfer either unless you want it to, unless you initiate a transfer between that record keeper and Fidelity. But new contributions would move over. So of this new fund lineup, do you have the opportunity to make choices? Absolutely you do. So in the early part of December, there's an early choice window that will talk about every new fund that's available. So if you, for your contributions beginning in that 12/31 check, you need to decide where you want those to be invested. And you can do that in the month of December, even though you haven't had a contribution go yet, you can already set it up. So when that first contribution goes, it's ready. If you say December's already crazy enough, I do not want to deal with this at all, that's fine. Your new contributions would go into a target date fund that's based on your date of birth, and then it would transfer. If you want to then transfer it to specific funds, you can do that beginning in January. So there's no problem. You can let the process work its way through, or you can take action prior to the January date. So some people have said, I like this mutual fund I have with TIA. I want it, and I don't see it, is it in the new fund lineup? And if the answer is no, that it's not in the new fund lineup, that doesn't mean you can't get it. Through Fidelity, there's a brokerage link account. There's 22,000 different funds that are in that brokerage link account. We have 500 current funds across our record keepers here at UF. And of those 500, there's only 13 funds that are not available through Brokerage Link. And that's because they're TIA proprietary funds that TIA doesn't allow to have in another company's brokerage accounts. But almost every fund that you want is going to be available to you if you do not want to pick the current fund lineup that UF has worked through. You can go through Brokerage Link, and Fidelity can help you do that. So would this affect everyone? So I'm picking on Peggy a little bit, but Peggy's retired. And so let's say she had a voluntary 403B plan. So would this impact her? Well, it could. She, of course, would not be making contributions any longer because she's not getting paid through the University of Florida. But what if she has an account at TIA? Is this going to impact her? It all depends. It depends on where you have those assets. So I am not a financial advisor. Victoria is not a financial advisor, and we will never assume to be. So the best advice that we can give our employees is to contact your current provider. They're all very aware of this process. They are not necessarily happy about this, but they are aware and they are knowledgeable. If you were to contact your current provider and you didn't get clarity, or you got any type of pushback, or there was surprise and confusion, please reach out to me and let me know that. And I can make sure that I reach out to those providers and help you through that process. We've had a few instances where the providers have not been helpful to our employees, and I can make a quick phone call and we can get you taken care of. But we encourage you to talk to your current provider so you'll know what you have, and then also set up an appointment with Fidelity to make sure that you understand your options and how you can make those investment strategy choices that you want. Now, if there's people on this call who are retiring soon, first of all, congratulations. What an exciting time. I hope to be there one day. But I really encourage you to set up those appointments quickly and talk about your options, because this transfer may not have to happen for you. You may be set and locked in to these contracts with your current investment provider. You just need to understand your options. I had an individual last week who was passionate about this change and said, I am retiring soon. I do not want any of my money going to Fidelity. I am set with the current provider that I have. I'm not happy about it. And I want to stop, and I don't want any money coming out of my paycheck and going to Fidelity as of that 12/31 check. And of course I said, sir, this is a voluntary plan. Of course you have that option. Could I, though, encourage you to at least set up a call with Fidelity just to be able to talk about, if you're still here another year and you want to do pre-tax and you want to put $26,000 away and you can't do that in an individual retirement account, would you just have a conversation with them? And he was like, well, it's not going to change my mind. And I said, that's fine, but that's just what I recommend. Well, yesterday on our day off, he emailed me and he said, well, I don't even want to tell you this. And he said, but I talked to Fidelity. Here's my form. I'm going to move forward with Fidelity for the next year until I retire, because it really made sense. And I'm able to put aside $26,000. And he was like, don't say I told you so. And I was like, I'll never say I told you so. But internally, I'm thinking, I told you so. So please reach out to them. You may at the end say, no, I don't want to have two record keepers. I don't want to have two accounts. I understand that. I do not intend or want to make this any more confusing, but I just want you to understand your options. So what's happening? Well, watch your mailbox. We're sending you stuff. Retirees are getting postcards. Current employees are getting emails, and then a transition guide is coming in your mailbox. That transition guide, I will tell you, is delayed. I don't make excuses for that, except we had one record keeper who did not really want to cooperate with this change, and unfortunately delayed our timing because we had to get clarity as to what your assets were going to do. And we finally have reached an understanding with them. And so that transition guide is in the works and being printed and will be mailed to you. But if you need information before that transition guide hits your mailbox, you have my name, you have Victoria's name, shoot us an email. We want to get you the answers. We have pretty much the excerpts from the transition guide. We can provide you information. We can provide your financial planner information. And you don't have to necessarily wait. Someone said to me, well, you're making us wait too long. That's not my intention. I can help you get the information that you need. Definitely set up a meeting with Fidelity. We have two dedicated individuals, Gene Varela and JT Carpenter. They've been part of the UF 403B plan for many, many years, and they are well versed on this change and in the plans. They're very well versed on the state retirement plans and how they can coordinate But there's also a national team that's dedicated to the University of Florida as well. Once Jean and JT's calendar fill up, we've got people that can back them up and make sure that they have time to meet with you. Remember, you will have to make an investment election. And so, well, you won't have to if you want it to go into a target date fund, which, by the way, vast majority of people, that is where they have their money, is in target date funds. And so we feel like there's a really good, strong option for you. But if you want to move your money around and diversify, even though those are diversified, but if you want to pick your own, you can do that in that early choice window, or you can do that after January. And then I can't say this enough, and this is not just for retirement, this is for all of your benefits. Please make sure your beneficiaries are always correct. You've got beneficiaries on life insurance. The state provides you free life insurance. So you've got that plan. You might have bought additional life insurance through the University of Florida. You might have bought additional life insurance through the state of Florida. You might have a health savings account if you are in a high deductible health plan. That has a beneficiary attached to it. And of course, your state of Florida retirement plans and also any voluntary retirement plans you have will always have a beneficiary. I do not take this part of my job lightly. We see death and we deal with it. There are some weeks that it is overwhelming. And what is a hard conversation is when we are dealing with the loved ones and we're having to tell them what the employee had from a beneficiary standpoint. And that could have been what that employee chose when they first started at the University of Florida 30 years ago. And by law, we have to pay out who that beneficiary of record is. And many times, that is not what the employee's intention was. But I always encourage people, I've been doing this way too long, and I have way too many bad stories. And so someone said, you just try to scare us. Absolutely, I try to scare you because I want your proceeds to go who you want them to go to. So that's just my little tip for the day. Well, University of Florida HR benefits, we're here for you. We are here for you if you have leave questions. You want to understand more about these leave changes. There's a lot of stories out there about leave and the changes that are coming. And if you have questions or you've heard rumors, reach out to us and we'll dispel them or confirm them. But here is our email address just for leave. If you have benefit or retirement questions, some people are still questioning, which retirement plan do I have? And we can help you with that, but we can't give you financial advice. So if you want financial advice, here's the information for Fidelity. And then also, of course, reach out to your current investment provider with any questions that you might have. And we redid our benefit website in the last couple of months as well. And I'm excited about it. I think it's a little bit more clear to follow. So I hope many of your questions might be out there as well. But that's our presentation. And I would be more than happy to answer any questions about it, or we can wait till the end, Meg, however you want to do that.
Shannon, I have a question.
Okay.
Thank you so much for the great presentation. I personally really appreciate it. I've been having a lot of questions and I am not very well versed in all of this retirement thing. So it was very informative, especially about the change. I think from my understanding, I just want to see if you confirm it. If you don't want to participate, you just fill out the form and send it to you and just say, I don't want to participate.
You're absolutely right. So they are on our website. And while Peggy's talking, I will post that link for the form, for that SRA form. And you can put on that form that you want to stop your contributions. And then you can even indicate on there, if you want the contributions going through the 1218 check. We just have to receive that form from you no later than December the 7th, because we're on an early payroll for that 1231 check. We want to make sure we get your contributions stopped, and so it will not come out of that 1231 check. But I will put the link in the chat so you can make sure you can access that.
And then another comment, because of what UF has and the excellent customer service that we get. And I think I've been with Valak for, I don't know how many years, and the service they did. I was really surprised about the customer service from Fidelity. When I got the first email from you, I tried to reach out to them. I think I transferred from one person to another, and somebody said, okay, yes, we're doing that, but we don't know what is it. We're working things out. So I just felt like, I don't know, the customer service that I was used to, I wasn't really finding. So it just really took me back a little bit. It's a comment, I just wanted to mention it to you.
I really appreciate that. And I believe in the beginning, their customer service team, because everything had not been finalized, did not have all of that information. And we have really worked on that. Jean and JT, our two dedicated UF contacts, are very well versed, and they are, but if you call in, to that 1-800 number early on, I'm not surprised. I'm disappointed, and I'm sorry that that's the experience you had, because I've experienced a different side of them, but we are always wanting that kind of feedback. I received one this morning, and I have a conference call with Fidelity in just a couple of hours to say, okay, let's figure out how we can do things a little bit different. So we're always open to that information, and I thank you for that. And Victoria has already put the link to the form out there.
Thanks, Shannon. Do we have any other questions by chat, or if you unmute yourself, you can, any other questions or comments before we bridge into Peggy?